we've got a caller right now. We've got Ben in Tallahassee. Ben, how are you?
Great, Basil. How are you?
I'm well, thank you. Question away.
Awesome. Well, this might linger or transition into tomorrow, and I actually have to get going. But so, you know, you turn on the radio and every other station, you can hear the talking heads talk about China and the trade deal. And I tend to agree with the majority that, let's just say, right, this Friday, all of a sudden, trade deal is done. You know, all the U.S. Demands have been met, and China's happy with their side. Don't you agree that any concern about going back to December low or any concern at all about the market going down would be over with, and this thing would just jettison up 2 to 3%, and now we just look onward and upward? Or what are your thoughts on that?
Yeah, so that's a very good question. The answer is, in the short term, absolutely. If there's anything that resembles some kind of a trade deal, but remember, with a trade deal with China, it isn't what is said at the announcement. It is what is understood by the various parties 2 weeks later. How many times have we had a complete, absolute agreement with some countries, and like a week or two later, their side says, wait, this is what we agreed to, and the other side says, wait a minute. So I think it's going to be very choppy and very hesitant. My analysis right now is that China, from everything I can see, I don't read too much about China, other than just hearsay, things that I hear sporadically. But my chart says that China's FXI, this is the very big iShares, I think it used to be called the 25, but it's the iShares China Large Cap ETF. It made an important low round about the 19th or 20th of December, a little bit before, January, a little after us. And this is a very good rally to the 9-period moving average. It too has made a peak D. The weekly chart is improving a little bit, but from everything I can look at, this chart says to me, it's almost like the copper chart. It's almost like some of the commodity chart. It says more work needs to be done before it can really have a big rally. And I suspect that whatever they say, it's whatever they do. They are, I think, behind the black ball. They are the ones that have to make the move. That's my contention right now. Everything I'm looking at suggests that it's China that's going to have to make the compromises. The first time we've seen that in decades. And they're reluctant to do it, but they might be forced to do it. So all I can say is yes to your question or statement that when China, if they start to agree, we'll see a big ramp up. My other side of it is that when the wheel hits the asphalt, or whatever you want to say, when we finally come in for the landing, China isn't quite understanding what they were supposed to be doing, not to what we're expecting, and that the reality and the anticipation, they don't quite coincide. It takes a while for that to happen, and they are intransigent. They are very reluctant to make changes, and they think they have the upper hand because of Trump, but I don't think that's quite the case. So I'm looking at this and I'm saying, I like your premise, but I think it's just a premise, and I suspect that when we're looking at it in February or March, we'll see that the market wasn't quite ready and China wasn't quite ready. I hope that answers your question. So, okay. So let's see. So Ben, we'll get you back. I know you were in a bit of a rush to go, but that was my answer. You can listen to it afterwards. Meantime, let's get back to the first question was UWM. So the UWM, I don't really want to do the UWM other than to give it a parallel. It is the ProShares Ultra Russell 2000 long side. So let's just go, if you don't mind, Jim, I'm going to go to the IWM. I know you look at it the same as I do. Sideways consolidation. This rectangle formation is really not an oval. This is more a rectangle, can last a lot longer than your patience. My suspicion is we could pop to the upside to the 147, 148s, and then all of a sudden we start to come back, and if it starts to take out 145, 50-ish support, either with or without that pop-up, be careful, because at 140, under 144, it starts to go, that MACD will start to deteriorate At this point, the MACD is very strong, and I'm saying that's the reason why I say there's still some internal strength for a little longer in the key indices on the daily charts. It's going to take a really bad news event to knock the IWM down to the 143s. And if it gets to the 143s, I think it's going to be moving quite a bit lower before it comes back up. But I wouldn't be surprised if all the indices are just stuck in a range for now, a range of maybe 4%. I'm not sure I can make that 2.5% to 3% up, and maybe even 2.5% to 4% down before a much bigger decline occurs. That's just what I'm looking at right now. So the question is, will charts assimilate any upside for the IWM? Sideways peak D, been in since 130. I didn't see that. Congratulations. So you've been in, then I'm going to do the exact one that you're looking at. Whoa, I should have seen that. I didn't read that last UWM. Congratulations. Using the Chapman wave, Jim. I like that. So, very nice. He's in from the third, right there. So you're in from the 50-something, and this thing is trading at 62. I'm going to make it real easy for you. All I'm going to say is I would hold along at this position. I would only start to take off under two conditions. One is if the UWM trading is 62.36 with a low today of 61.36, if it starts to trade at 60.95, no, I don't know why I would even give up 1 3/4 points, almost 2 points. No, I'm going to say this, Jim, this is where I want you to put 1/3 of your position, have a trading stop. It's a 62.36, make it a 40-cent trading stop. And I'll talk about it more tomorrow. I don't think we need to do anything other than that right now, because it could go to a leg.